What is up, guys? Dirk here, and today is a bit of an educational breakdown in what happened yesterday because Bitcoin hit 25,000, actually 25.2, and then it broke all the way back down again. And I want to break this down for you so it helps you understand more how these markets move and how you can make better entry and exit decisions and be more profitable with your swing trades, your spot trades, but also your day trading and your futures. So let's dive straight into it. By the way, if you enjoy this content, subscribe down below. If you haven't done so yet, click the notification bell, smash the like button so this goes out to more people, leave a comment down below, share it with your friends and family, and let's get into it. So what we have here is the daily chart of Bitcoin going back to about June, you can see over here. And what I want to point out is how this works so perfectly every single time. Okay, so markets, price action is drawn to liquidity. It is drawn to previous highs and previous lows because how the average trader or the average retail investor tends to think is that they use previous highs and lows to make decisions of where to place their stop losses. So, for example, over here we have this high and the market was going down. This was the whole FTX collapse, but the market is going down. So at any point here, if someone is taking a short, the average retail trader tends to think, well, I'm going to put my stop at this level because it tends to be safe, right? Same thing here, if they're shorting over here, put the stop here. Same thing over here, if they're shorting here, they put the stop here. So once a market turns bullish again, then previous highs become the target. So we got the 25K high, we got this high over here, lower high, we got this lower high over here, we got the FTX collapse, we're trading sideways here. And then once the trend is bottomed and it starts to change, and we start to see this move up, what becomes the objective? Well, the objective becomes this high, and this high because there is all that liquidity. There are all those stops of retail traders who have placed stops there who are hoping not to get taken out. And as you can see, that is exactly what happened. So in this entire move up over here, the move went pretty much straight from the lows to where? To exactly this high. And you can see we got these two wicks here on the daily, went just above it, and that is all that is needed because all these stops are here at this high, little wick above it, and everyone who's shorting here who have stops all the way up to this high got taken out. Consolidated a bit here, and then what do we get? One big daily candle straight through up to the second objective, which is this previous high. There is no resistance. You can see it just blasted straight through there, and it took that liquidity over there, took those stops. Then what we had here is this consolidation over here, the sideways grinding slightly higher with, of course, the bearish divergence with the RSI that was going lower, and we had the pullback. But where does it pull back to? As you can see, exactly this high. So after it took it, it went through the next level. This high became support over here. You can see this wick a little bit below it. Again, to be trappy, it bounced here a little bit below it. And then where did it go? A big impulse straight back up to where? The third objective, which was ultimately the objective of this whole move up. It took this high, and as you can see, it wicked above it ever so slightly yesterday, and then it immediately pulled back because that was the objective. The objective is simply to get a little bit above that to take out any stops and any liquidations over here that were placed all this way down to exactly that level. Slight wick above it, grabs all that liquidity, and then it dumps. And if you're wondering how it dumps, technically what has been happening is whales or market makers who've been pushing this up with futures. They're distributing their spot. So they're pushing this up with futures positions, buying and buying, buying, buying. As soon as it hits the objective, they close all their open long futures positions because there's no spot buying. It immediately pulls back this quickly, and that is what we've seen now. So this is really just explaining to you what happens, and hopefully this gives you a better insight. This happens on all time frames. I'm showing you the daily here, but it doesn't matter if it's the 4-hourly or the hourly or the 5-minute chart. This concept of the price moving to previous highs and previous lows is just how the market behaves, because that is what it does all the time. It tries to trap people here. When it's moving down, it tries to trap people to short, then it runs back up and it takes all the stops, all the liquidity, all the liquidations, and then eventually as people run up here and they start buying because they think, oh, we just broke out above 25K, there will be people who are buying on leverage long at the very top of 25K because they think we're breaking through and we're going up. And that is exactly, it traps people at the top again, and then it pulls down. And this is how the market just works 24/7, 365 in the crypto markets, of course. It's constantly trapping people and then liquidating people, longs and shorts, inverse, vice versa. So how can you use this to your advantage with trading? Well, as I've just broken it down, you can start to guess more of what is the objective, what is the target of the price action, right? And as long as markets don't completely disappear, so we assume Bitcoin and crypto is here, okay, they don't disappear forever, then it's just a constant game of bearish and bullish trends, trap people, then move to the opposite side, liquidate those trapped people, trap new people, move back to the opposite side and trap more people. So you have to think, previous highs and previous lows tend to act as magnets for the price action, and you can use this to your advantage so that you know that when there is a previous high, for example here, not only is it a target, so when you're longing, you can target this high, you can target this high, you can target this high, right? But you also know at this point that when it gets to that high and it wicks slightly above it, that's not an invitation to go long. That is actually looking to do the opposite most of the time, because once it grabs that liquidity, there is a pullback. Even here, even though it continued higher, you can see it wicked just above it at 21.5 and it pulled back all the way down to 20.5. So you can't just blindly go and long, which is what a lot of people do because they think it's a breakout and then they get wrecked on high leverage, right? Same thing over here. It did take it out, it grinded up here, but eventually it did pull back and we went from 24 all the way to 21.5 first. Same thing here. We hit 25.2 and we already dropped to 23, almost 23.2. Okay, so you can use this for your targets when you're longing. So if the trend does look bullish and you think the trend is up, what are the likely targets? Well, it is previous highs in a downtrend because that is where the liquidity is. And you can also use it for your exit position. So if you take a long over here and you think the target is this one, well, you can exit just a little bit before that because it is likely that the price is going to wick just above there to take that liquidity. You can also use it in strategies to be able to short. In this case, the trend is up. You can try and short when it wicks above there. So if you know it's pushing like this, you could actually use this, that once you get that wick above that high, and you're looking on the lower time frames, of course, you're not doing this on a daily chart. When this is happening, you're looking at, an hourly, 15-minute, 5-minute chart, and you could potentially take a short position once you get the confirmation here, once it looks like an exhaustion, because the objective of taking out that liquidity has been achieved. A lot of people are getting trapped here longing, and if you do the opposite and you short when it grabs all that liquidity, it can be very, very profitable. So hopefully you found this kind of mind-blowing. I did when I discovered this concept too. It's just all about liquidity. The price is drawn to previous highs and previous lows. It's constantly trapping people and then moving in the inverse direction to liquidate them. And whether you're trading with leverage or whether you're just simply buying and holding, it's still the same concepts, because you can look at this on the daily or the weekly chart and it gives you a better indication of knowing that, hey, if you were going long here from 15, 16K, 25K as the objective would have been a nice place to exit. And even if you were trading spot and you'd bought at 15 or 16K, you would have had a very nice ride to the upside at 25K and you could maybe take some off the table. But also if you're trading with leverage, you can use this for entries on lower time frames and so on and so forth. By the way, if you do want to trade, personally, I use BYBIT as my exchange for both spot and futures trading. The link in the description down below gets you the best deal, the best bonuses. It allows you to trade with my trading competition that I hold every month. So if you want to join that, use my link below, sign up there. So far, great experience with BYBIT, in my opinion. So hopefully you enjoyed this. If you did, subscribe down below, smash the like button, and let me know actually in the comments if you enjoy this kind of educational type breakdown and you want me to make more of these types of videos. Let me know. Happy to do them. Thanks for watching. Have an awesome day, and I will see you in the next video.